Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So, one hell of a week for Tesla. We started the week with the earnings report, earnings call. All the expectations were that the Tesla stock would drop. What happened? Well, the exact opposite happened. Right now, we're at $168. There's a forward PE of 60.9 times. Yes, it is lower than the 5-year mean, but of course, it is quite expensive for most people. EV to EBITDA in the next 12 months, 29.1 times, price to sales 5.1 times, price to free cash flow has of course exploded up, which is a negative thing, but that's because this quarter free cash flow was negative. This is in the trailing 12 months basis. I do expect that metric to come down throughout the quarters. The price earnings to growth went up a little bit, now 5.35, so definitely not on the cheap side. Also because, well, expectation right now with regards to growth are negative. If we look at the analyst average price target, it has come down a little bit yet again, sits now at $183, representing around 9% upside from the price we're at today. Year to date, the stock is down 32%. If you look at what the analysts are expecting for fiscal year 24, 25, and 26, revenue sales for fiscal year 2024 are expected to be up around 2% year over year. Some are even saying that it's going to be flat. More on that in just a second, because we did have some comments from Elon. EPS is expected to be down now close to 17%, but then we are seeing a reacceleration in fiscal year 25 and 26. Now, for those of you that missed the earnings review, I already did a video about that. That will be in the top right corner. This video, I'm going to go over the couple of things that were mentioned that are interesting, still interesting, and have to be repeated again and again, plus talking about China numbers and some revelations with regards to FSD. So stay tuned for that. If you enjoy this type of videos, give it a thumbs up, subscribe. If you have not, we're very close to reaching 40,000 subscribers. So if you could help me by pushing that subscribe button, it's free. You can always unsubscribe later. Would very much appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So overall, this was the quarter. Really not a good quarter other than, I mean, if we can nitpick here, a couple of positive things would be from energy generation, services, and other revenue. Energy gross margin sits at 24.6%. That's up 1,370 basis points year over year. All the rest, really nothing to cheer about. Supercharger stations are up 26% year over year. Supercharger connectors up 27% year over year. Of course, the more you open up to other EVs, more revenue from supercharger, from their charging network. It's a bit like the gas station today. Then with regards to the outlook, which is the main reason why the stock went up, it's because of this. One, Elon said, I think we'll have higher sales this year than last year. Two, they've updated their future vehicle lineup to accelerate the launch of new models ahead of their previously communicated start of production in the second half of 2025. I mean, they say it's going to be early 2025, if not late this year. I think your hopes should be set on early 2025 rather than later this year. They also said that they think this should allow them to get to over 3 million vehicles of capacity when realized to the full extent. Of course, this also means more output on the current investments, great for the financials. Now, at the start, it will achieve less cost reduction than previously expected, but in my opinion, it's the right move. Billionaire investor Ron Barron also thought the same.
And it's going to go up, and when?
Oh, it's going to go up huge.
When?
And now. I mean, now is the bottom.
Okay.
And so what they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they're making it, they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So there's 1.2 million cars they can make extra in an existing facility with no more capital. And they're not going to make the cars direct cost as cheaply as they did before, as they expected to. But overall, until they expect to do 5 million of these new cars.
What could also be a positive for the financials is one, of course, the energy storage business. The deployments for 2024 will grow at least 75% higher from 2023. They expect the inventory build to reverse in the second quarter and free cash flow to return to positive again. If the company generates a lot of positive cash flow, they could obviously buy back shares. I don't expect that to happen anytime soon, but this is one of the ways you could get Elon back to its 25% ownership. Up next, with regards to the Tesla China weekly insured numbers for the week of April 15 to 21, that number came in at 5,168. So again, we are seeing here a bit of weakness. More interestingly, Tesla has launched enhanced autopilot subscriptions in China, $99 a month or $66 a month for 3 months, which could open the door to full self-driving in China, which may be or may not be announced on August 8th. We know 8/8, pretty, let's say, meaningful number in China, so maybe this is them opening the door for that. Remains to be seen. Then with regards to Tesla's India investment, yes or no, so we've got this headline right here, Tesla's India electric vehicle plans on track despite Elon Musk postponing Modi meeting. The electric vehicle maker is expected to build a base in India, given the country's importance as a sales market. India's election rules may have prompted Musk's decision, as Tesla's plan to enter the market could trigger a political slugfest. Remains to be seen what happens there, but I don't think it's an if, but a when Tesla will open up a factory in India. Then some more news with regards to FSD. So apparently Tesla FSD 12 is running in Europe, more specifically in Germany, and Tesla is giving demos to regulators. To which Elon Musk here responded, "We believe version 12 is ready for supervised FSD in left-handed drive countries. Right-handed will take a bit longer." This was a post on LinkedIn from the Swedish Transport Administration. Now, if you've been following this channel for a while, you know me with regards to FSD. I do still think that it's going to take a while in order to convince regulators to actually make this a thing, for this to be a wide release outside of the United States. More recently, there have been reports, recalls of FSD because it was a direct issue that caused death. And of course, when you read those headlines, it again puts some roadblocks towards a fully successful wide release. So it remains to be seen. The tech can be great, but you can have great tech and then you can have politicians, laws, regulators that will always make sure that things move extremely slowly, especially in Europe. I mean, there is this joke, right? The United States innovates, China replicates, and Europe regulates. But overall, in my opinion, Tesla has now set, or especially Elon has now set some goals for this year. Big importance on that event in August, and then some more important goals with regards to the next generation vehicle. If you say something, you better deliver. With Tesla, with Elon, we know they have their own watch, it seems. I mean, yes, they're late, but at least they deliver. But I think now specifically in this moment, they better deliver on time. It's always better to under-promise and over-deliver. They've been over-promising and under-delivering for quite a while now. When I say quite a while, it's probably in the last 2-3 years or so, definitely. So yeah, second half of this year, I think is going to be quite important for Tesla. Of course, second half of this year worldwide is going to be quite something as well. Now, with regards to the stock, we could have bottomed. Again, I'm not a chart specialist. I don't have a crystal ball or anything. But if we look at the higher lows here that started already since March of 2020, we got one here in January 2023, and maybe this one, this green candle that we've got this week could have been another bottom, but we also are still under the huge downtrend that started back in October of 2021. In my opinion, it will take a while until we break above that. Of course, every week that passes, to break it, the price becomes lower and lower and lower. So overall, the stage has been set for Tesla to come out on top yet again. Now execution is key. Coming out on time with your products after you announce them is going to be of extreme importance. I think that August 8th, we're going to see a product reveal. Hopefully it won't be a Cybertruck type of event where you will have to wait 5 years or God knows how long until the products actually reach customers' hand. For the next generation car, I hope that they are doing some types of Apple reveal where you can immediately order the new model. Maybe it will be like the Model 3 refresh. Suddenly it pops up on the website and you can order that. But in my opinion, since it is a next model and a new model, I do think that they're going to have a big reveal for that. By the way, Model 3 performance, wow, what a beautiful looking car. So that will be it for this week. Quite short of an episode. Do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye bye.